Good morning and welcome to the Trade Setup right here on BloombergQuint Live. I'm Niraj Shah and I'm hoping the audio is clear. I've tried my best to do that. Well, let's tell you what's happening around the world. Now, a lot of you heard of the new Fed policy or the pivot that Jerome Powell made. What has the Fed done? And that's what stood out for me. And I'm just trying to explain this to you in a simple fashion so that all of us are on the same page. And then, of course, we'll do other things, which is the Fed has paved the way for low rate era with inflation able to run higher. What does this mean? It means that the central bank now has the flexibility to let the job market run higher and price pressures, which is inflation, move higher before taking any kind of action on the policy rates as it would have previously done. So previously, if indeed the inflation rates would have inched up higher, it would have compelled the Fed to raise rates. Now, in the new policy, it lets the Fed not raise rates immediately, watch and assess the situation, and then take a delayed action. Effectively, it means that the Fed will keep the rates lower or can keep the rates lower for a much longer time, even if inflation and the employment figures change, because those are the tools or those are the metrics that it uses to set the rate decision. And this is positive for equity markets, right? Every time you've heard that what if the Fed were to raise rates? Now, that is not the point in question. And therefore, risk assets can effectively have a better time. So that is what changed the course of the US markets ever so marginally in trade yesterday. Remember yesterday when we shut shop, the Dow, S&P, Nasdaq were very, very flat. And I think post that, we had a minor uptick for the US indices, but it was very, very labored, really no big moves. Maybe some of it priced into, or maybe just because the markets have run up so much, it is a day of consolidation. And I think that is what is showing in the Asian screen as well in the session today. We have a morning of consolidation on our hands. So Asia's kind of makes maybe marginally lower certain indices. I mean, I looked at the 5 or 6 indices and 2 or 3 of them were slightly lower. HSI and KOSPI interestingly are higher. The SGX Nifty 2 indicates a start which is marginally in the green the last time I checked on my phone, which was about 20 minutes ago. The SGX Nifty was indicating a start about 1/4% or 1/3% in the green. But we could have a start which is marginally here and there, and that could well happen. Yeah, about 0.5% now in the green. So it's actually inched up a little bit from that last time that I saw. So we have a start which is positive. Now, the only point is, I would presume that because of the hurdles that we eclipsed the key hurdles of 11,400 and 500, and the channel is much higher. But a lot of technical analysts that I spoke to yesterday post-market said that the risk reward is not in favor of long only Nifty trade, a long Nifty or long index trade at the current level. So the risk reward is not favorable. But people who are prone to take risk might well do that. The good point is that India VIX, not for 5 consecutive series, not sessions, really 5 consecutive series, it's my mistake. But for 5 consecutive FNO series, India VIX has only come down, and which is supporting the buy on dip strategy. Sure, even for the last 5 sessions, VIX may have been lower. And small caps continue to shine. The index is up for 9 straight sessions, and which clearly shows that the bottom-up bias of the market remains. The only hitch, if you will, for the mid-cap space is that the DIs are absent from the market. The last time that the mutual funds or the domestic institutions net bought was on July 31st. Can you believe that? I mean, we've been talking about how mutual fund flows have been positive all through the last 2-3 years. The last 3 months have been completely contrasting. And this shows you, right? I mean, July 31st was the last day they net bought. So FIs have been buyers, but DIs have been net sellers. And therefore, I think stocks and indices to watch out for today. I think Nifty Bank would be that key one that everybody would be watching out for, simply because of the FTSE rebalancing, or not rebalancing really. What the FTSE has done is that they have said that they will not include HDFC Bank, Kotak Bank, and IndusInd Bank in its indices due to the low FI headroom. This was the one as planned earlier. Now, because the FI headroom has fallen, these stocks won't be added. Now, does this mean that there will be outflows from these stocks? No. There was expected to be inflows, and those inflows won't come in. But some of these stocks had run up a bit in anticipation of this action, because the smart money knew that this is going to happen, possibly going to happen. And therefore, maybe there is a sentimental downtick today, maybe some flows based downtick today could happen. But the SGX is showing that the market doesn't seem to be too perturbed, because I would reckon that if the SGX is up 0.5% and the Nifty starts off 0.5% higher, banks would be participating, not going the other way. So be mindful of that. Okay, what else? Stocks to watch. I think 2 or 3 big reactions anticipated. GMR, aside of the banks, of course, GMR Infra would certainly be in focus. I'm ignoring the results of GMR, Edelweiss, and NMDC and talking about the things that have happened. So GMR Infra has received the approval of its board to spin off the non-airport business into a separate entity, which would mean that they would list, or the GMR Infra, the listed entity which stays, will house the airport business. What does this mean? This means that the airport business of GMR Infra will be the only pure play airport business in the country. And therefore, people who want to bet on the airports business in India now have a clean play. Remember, Adani Group is foraying into airports in a big way, right? So now we might actually have 2 pure play airport developers listed in India, as and when Adani Group decides to maybe hive off its airport business or have a larger share in the airports business, etc. But airport becomes a real sector in India, and that's a big tailwind. And I would reckon that GMR Infra could react a little bit to that in the session today. So do watch out for that. Do watch out for NMDC. The results were below estimates, though I do think that Q2 will look much better than Q1 because of price hikes and higher volumes. But the big news is this: they're going to demerge their INL steel plant at Nagarnar in Chhattisgarh. Now, why is this important? I've just noted it down for my benefit. Keep that in mind, viewers. This is a big thing because there's a pending payment and all of that is fine. But the decision to demerge the steel plant might pave the way for sale of a steel plant, of the said steel plant. And I think not too many people were penciling in the value discovery out of a sale of this steel plant, and therefore this could have a big potential positive ramification for NMDC, and therefore do watch out for this stock. Could be a positive. Edelweiss is interesting because of 2 things that they have done. One, in their wealth management business, PAG, which is a large Asia-focused investment group, has bought about 51% stake, effectively valuing the wealth management business at northwards of 4,000 odd crores. And they have said that they will list this business separately, which is the wealth management business. Secondly, the board has also given the approval to sell in part or in full the asset management business, which houses the Edelweiss mutual fund, to a strategic investor. And I would think that this is big news because now investors who don't want the tougher part of the Edelweiss business but want to invest into the wealth management or the asset management business can do so, I would reckon. And that should be construed positively. It does have the legacy issues, but these are positive developments, shows the intent of the promoter to accept that, okay, let me kind of separate the good businesses from the bad. And therefore, there might be some impact on this one. I think Edelweiss has been on a bit of a roll for the last few days, or some upsurge in the last few days. So I don't know how much more meat, but I reckon this should be positive. So each of the 3 names that I've spoken about have a corporate development to themselves, which is more important than the Q1 results that came out, and could show a positive reaction. So therefore, watch out for each of these 3. Lastly, before I wrap up, one of the other things that might impact the index today is IT. Goldman Sachs has gone out and upgraded TCS, the entire IT space, but TCS a big upgrade. Some of the others too have been upgraded. Therefore, watch out for the Nifty IT or the large cap IT names. They could all be in flavor today. So that's the nuts and bolts. Banks, some of them could have a bit of a downtick. IT could have an uptick. And the 3 names that I spoke about could have big corporate development reactions. So therefore, watch out for those. Have a profitable day ahead. Thanks so much for tuning in.